Hello students, today we are going to learn about function of banks, module B. Let us see. First we come to principle of lending. The very famous banker L.C. Mather has given a definition which itself shows what kind of advance, what is the principle of lending. It means ideal advance is one which is granted to the reliable per customer. First is a reliable customer for an approved purpose in which the customer has adequate experience of the customer, safe in the knowledge that money will used to advantage mean to earn profit, and repayment will be made within a reasonable period. This definition completely shows how a banker chooses a customer. Now we come to we will see what is the principle of lending. There are different writers are written different principles, but mostly there are 8 principles of lending through which banker has to go and see that these principles are complied with. First is 5P. We will discuss 5P in detail in our next PPT. Then there is safety. Safety means our loan should be secured and there should not be any loss. Security must be there. It may be primary security or collateral security. That will also we will discuss. Suitability. It means that purpose of the loan should be there and it is suitable as per the laws of land. Profitability must be there. Then liquidity is also there, because without liquidity we cannot get the repayment. Then integrity both on the part of borrower as well as on the part of banker. And then adequacy of finance means that finance should be adequate, should not be more than requirement or less than requirement. Now let us discuss all these points one by one. First we will discuss 5 P's. 5 P's of sound lending. First is people, second is purpose, third is repayment, fourth is protection, and fifth is prospectus. People mean who is the borrower and what is their ability and willingness to pay. Type of business. In type of business, we means that business should be a legal business. There should be proper licensing, proper facilities. Organizational structure. Organizational structure means whether it is being done by individual or partnership firm or a joint stock company or whatever. Then payment history with other institutions. If it is existing party, we have to see through the CIBIL report and other reports available that company is having good payment history with other institutions. Then we have to go through carry reports given by CRISIL, Dun and Bradman, all these things. The information from other lenders and parties. Always go by the information from other lenders and party also, because we can go as I already told that payment history with other banks and lender must be seen. Then what is the purpose? Without knowing the purpose, the bank cannot define its product. Suppose a person come to a banker and say, give me 2 crore rupees. First question will be, what is your requirement and what is the purpose of this? You are taking this money. So without knowing the purpose, nobody can finance anybody. Sometimes good borrowers, banks come with the specific product which fit for that specific customer. Suppose like housing loan. The purpose of housing loan is to purchase or build up a house. So banks, looking at the volume of customer, prepare a separate product, housing loan. Likewise, vehicle loan, education loan. So, if purpose is there, bank can do so many things. As a banker, the initial interview should focus purpose, because if the purpose of person is clear and we are confident that yes, this purpose can be served, definitely our loan will be safe. Third is payment. What is the term and borrower's ability to pay? Term of debt. Term of debt means that should be like that it should be repaid fully within the period allowed for repayment. Otherwise, if the repayment is not there, it can be turned into NPA, etc. Source of repayment. Now we come to, this is very important, source of repayment. Source of repayment should be income generated from the business for which purpose the loan has been given. Suppose if business is not there and he is repaying the loan from its own source, it will not run for a long period. Definitely someday he will say his business is not going on, he can stop the payment. So source of payment is very important. Then income to debt service requirement. How much he has to pay, repay, and what is the income. This is simply, if income is more than the repayment, our loan is safe. In general, a thumb rule, DSCR, what we called debt service coverage ratio, should be 1.5. Protection. Without protection, though there are loans which are clean in nature, but normally in large products, housing project or infrastructure project and other working capital loans, bankers prefer to have some protection by way of collateral security. Perfection of security. When security is there, we have to see so many things like perfection of securities. Perfection of securities mean, suppose it is to be mortgaged, it is to be mortgaged as per the law of the land. It should not be like that we simply keep the title deed and it is mortgaged. No, the perfection of security must be there. We can take the help of our legal team. Most of the bank does like this. Market liquidation value. Suppose I have a security, but that is not marketable. Suppose I have a plot is not have proper assess. When I go to sell that property, nobody is taker. So we have to ensure that it is marketable and it can be liquidated anytime. Lien perfection. There are so many cases where we have to mark lien, like our FD. In term deposit, we mark a lien on our security. So lien should be perfect. Similarly, in cases are there where government requires that after mortgage you have to get it registered with their office. We have to do that also. Assess and control. As I told, suppose a plot don't have any assess. It is of no value. Nobody is going to take this if we are going to sell. So assess and our control. Suppose the plot is located in such a place that we don't have any control over that. That should not be there. Marketability. Marketability is the most important characteristic of a good collateral security or primary security. Marketability must be there. Then prospects. What is the likelihood of continued repayment ability? We have to see how market is going on. What is the future of this market? Whether market of the product which is going to be produced by our borrower is have long-term market or not. Industry trend. We must go through the industry trend also. There are so many reports like CRISIL report or CIBIL reports. We can generate the future prospectus and industry trend. Succession continuation plan. Very important. Because if it is a one-man show, in case of individual or we can say proprietorship firm, there is no succession plan. How after demise of a key person, this firm will run, it is very important. There are so many cases where firm is going very well, but after retirement or demise or resignation or whatever way the key person left the firm, firm become defunct. So the succession plan must be there. New developments, whether our borrower is have knowledge of new developments going on in industry. Suppose a person is uh, doing something, the product is becoming obsolete within 3 years. So, because if he is not very good, have very good knowledge of new development, he will not survive. New law and regulation. This is also very important because government go on changing the law. If we are not familiar with all these laws and guidelines, it will be difficult. Suppose, for example, pollution certificate. Every year, person has to go to concerned department and get it renewed. If it is not renewed, it is of no value. And if it is expired, any time, government official come and close this one. Now comes safety. Safety first, because without safety, we cannot lend or we cannot earn profit. Safety is essential principle of lending because banks deal with the public money. It is not my money. It is not my money that I can give to anybody. It is public money. Bank get the money from the public by way of deposits and then lend it to other borrowers. And under obligation to pay back the money whatever deposit required. Anytime deposit can come in saving account or term deposit to get the money back. So it is very important that safety must be there. Security, as I told, loan can be of two type, clean or secured. In case of unsecured loan, normally margin and interest is higher because risk is there. But in case of secured, we have primary or collateral security. Primary security means the security against which we have financed, like stock in case of working capital limit. But for collateral, this is other than primary, over and above the primary security. Like in case of working capital, we have financed for the goods and we have primary security as a goods, but we have still collateral security also by way of his office, mortgage of his office or his house. As already discussed, security should be realizable, enough margin for cover, because there may be fluctuation in the value of collateral security. So we must have sufficient margin that in case of decrease in the value of security, it can be covered. Insurance. Insurance must be there, whether it is stock or whether it is a housing property. Value to be certain and should remain constant. Though it is not possible to say that value remain constant, but it should not be fluctuate heavily. That is that point we have to take care. Suitability. Suitability means we sanctioned a loan for purpose of construction of a housing complex. But instead of construction of a housing, that the money is devoted to some real estate function like bridges or roads or all these things. That is not acceptable. We have to ensure that money move where it is desired to be moved. Of course, yes, working capital limit, it should not be shifted to get fixed assets. So move the money where it is desired. Purpose must be there. Government policy to be considered. Without compliance of the government policies and law of land, no business can thrive. Effort of the government to combat inflation and raising standard of the living of the people. This is also, in some cases, government direct that money should be moved to this sector, so we have to go by that. Profitability. Whether bank lend a person or lend in a project where profitability is not there? No, because as Ali told, bank is custodian of public money. So when we have to pay interest on deposit, definitely we must ensure profitable relation with the borrower. Lending must be result in profit for the bank in three ways: either it is interest, or either it is exchange, or either it is a commission. There are different platforms, different rates where interest rate is normally linked. Like earlier it was base rate, means base rate and what plus profit. Then come the concept of prime lending rate, then concept of MCLR, and now EBLR. EBLR means external benchmark lending rate. In this case, interest is linked to some other external factor like repo rate. As soon as RBI change the repo rate, rate of interest will be changed. So presently, most of the loans are either linked to MCLR or EBLR. Liquidity, without liquidity, either it is borrower or bank, nobody can borrow. Short-term finance and overdraft limits bill discount preferred by bank because it is short-term and liquidity is more. There are non-fund based lending, LC etc., LC-BG. In this case also, liquidity is more. Particularly BG and LC, money does not move to the other party. We do not disburse the loan, only there is commitment that whenever required, we can pay the money. So there is more preferred mode of lending by the bank. But in case of term loan, liquidity is lesser, there are installments, amount is also high. So we have to ensure the liquidity with the party is maintained. Integrity, willingness. Integrity should be on the both sides, the side of borrower as well as banker. How it is on the side of banker? Banker is holding so much data of a borrower. So bank has to ensure that it should not disclose this data to any other person, maybe his competitor or whatever. This is duty of bank. Quality of being honest and having strong moral principle, it is for the both. Borrower's integrity should be seen. We already told we can go to existing borrower, we can go to market, we can reports available to ensure that borrower is have good integrity. This is very important. Suppose customer come to me and ask 5 crore, and through his project report I find that, but I give him 3 crore. Whether it is okay? No, because it is under financing. In case of under financing, he will definitely go to some other person and get the money. And all your projections while sanctioning 3 crore instead of 5 crore wrong. So, which we have to ensure that there should not be under financing. At the same time, there should not be overfinancing. What will do? What he will do? He will divert the money to other purpose where he not getting to income, and ultimately it will affect repayment capacity of the borrower. So finance should be given as per the requirement, as per the proper requirement. It should not be under finance or over finance. And another point very important, it should be at the time of proper time. Suppose he is going to start his product in 3 months and we are sanctioning the loan and disbursing in 6 months. It is of no use. Now we come to other part of this section, the type of borrower. Type of borrower for banker, there are a number of person who come to us. There are individual, there are sole proprietary firm, Hindu undivided families, partnership, joint venture, joint stock company, statutory corporation, trust and every person who come to us different, and normally bank has different policies for different borrowers. For individual, definitely a cap is there, we cannot go much beyond that. Similar case, sole proprietorship firm, where there is also cap. Most of the banks are having a risk appetite in different category of borrower. Most of the bank prefer joint stock companies or statutory corporate, because these are very big firms and risk is comparatively less. But we have to deal, as a banker, we have to deal with all these things. Suppose Hindu undivided family, also recognized type of borrower, where Karta is the main person and work on the behalf of all co-personers. Partnership also there, this is very prevalent. Presently, LLP is coming, which is just like joint stock company, because in case of LLP also, in partnership firm, all partners have unlimited liability. But in case of LLP, limited liability partnership, every partner has limited liabilities. Joint ventures are there, two companies, two partnership firms can come together and take a project on joint venture. Joint stock companies, where shares are held by so many people. It may be private company or it may be public limited company. Statutory corporation or corporation made by the law of federal law of state. This is also. Then trust and cooperative society. These are type of borrower which we come across when we are going to loan. Credit facilities can be either fund based or non-fund based. Fund based means where we sanction the loan and disburse the loan immediately, and borrower use it and repay it with interest as per the time schedule of the term loan or term of repayment. But in case of non-fund based, there is no move for money for bank to borrower. There is only commitment on the part of borrower. Yes, whenever the third party who is given guarantee by our borrower want the money to be paid, bank will pay. What is very important, that when a BG is invoked, bank has to pay immediately. There is no other excuse, any excuse that bank is not. It has to pay as well as demand is right. As I already told, in case of fund based facility, there is disbursement, actual transfer of fund to the borrower, and it is based on time period, can be short term as well as long term, but only condition is that bank disburse the money immediately to the borrower. Like it is like working capital finance, project finance, agriculture loan, export credit, retail finance. In all these cases, sanction is there, and repayment period fixed. Borrower has to repay. Repayment schedule. In case of non-fund based, there is no immediate transfer of funds, but a commitment is made by the bank on behalf of the customer to make the repayment in case the default by the. However, though it is not, we call it non-fund based, but however, it can be converted into fund based. How? When it is third party come to us, the BG and we have to pay, and it become fund based. So whenever we appraise fund based or non-fund based, but fundamentals are same, because non-fund based can become fund based. Thanks for watching. I hope you will benefit from this. Thank you very much.